Hey, everybody. Something came across my desk recently. It was a September market myth. Now, I'll let you start off by asking a question. What's the difference between a myth and a legend? Well, stories about everyday humans, usually leaders of some type, and are contained within are usually what's contained within legends. Myths, by contrast, are distinguished from legends in that they usually deal with gods. They usually have no historical basis, and they're set in a world of the remote past, usually very different from the present. Now, why do I bring that up? Because the September market myth that I was being told of, there's a historical trend, but it's not a rule. Now, going back to 1928, S&P 500 has seen an average decline in the month of September, and it has also been the worst performing month. Both of these factors contribute in having given September this reputation of being a terrible month. And there are some folks that say you should be pulling out in the months of September and reinvest in October. You see people trying to time the market and things of that nature. But here's the thing. Averages are just that. They're averages. They've included events like the 2008 financial crisis, 1931 Great Depression. In fact, September has posted negative returns about as often as they've had posted positive returns. And in fact, they've had 4 consecutive gains from 2016 to 2019. So in 2016, 17, 18, and 19, September were all positive months. Now, seasonal behaviors may play a role in this. There are theories that suggest September's underperformance is more about timing than fundamentals. Investors are returning from summer vacation. They're ready to rebalance portfolios. They're ready to harvest tax losses. They have fall expenses like tuition. Larger institutional investors may be ready to close out Q3 on more of a note. These actions can create market pressure. They're not always based in weakening economic conditions. And the thing I would like to point out here is timing the market rarely works. Over the last century, the S&P 500 has risen in September 55% of the time. Median returns for the month hover around zero, meaning gains and losses often balance each other out. In investing, I think it's important to remember long-term consistency is going to beat short-term guessing. And the calendar-based timing strategies have historically underperformed. So as you're seeing things saying, hey, now's a great time to take those gains, sweep them off the table. Now's the time to short the market. Now's the time to go long with the market. Are you looking at this from a historical bias? Are you looking at it from a recent trend? Are you looking at it from a fundamental analysis, a technical analysis? Kind of what's driving that? Or is it just that? A myth? Is it a theory? Is it a legend? I don't really know. I would just say this. Like I said a moment ago, when you think about that long-term consistency, I think it's important to be investing in companies that you believe in, that you feel have value over the longer term, and that we're not trying to guess. The stock market can be as much of a gambling or a casino as you make it out to be, or it can be what it's intended to be, which is an investment in your own financial future, but also an investment in the companies that you're buying and believing in. I hope this has been helpful. I hope you found it interesting. Have a beautiful day.